Do you ever consider valuation when it comes to the overall market? Russell is trading at 45x, and I assume he's talking about PE.
I've said this, and let me say it very, very slowly, because this is where I differentiate yet again versus what is prevailing establishment. Prevailing establishment wisdom is that valuation matters in macro. That is not true. That is one of the many establishment, at least convenient wisdoms that people have perceptions of in their own mind, that they can wake up one day and they can pull up their Yahoo Finance quote, which is free, that the Russell trades at 45 times, and that everyone in the world should know that that's expensive and therefore it should go down. If it was that easy, why does it never work? Just asking you. I mean, that's why the establishment consensus and process, which really isn't a process, just to call something expensive or cheap, that's point one. That is not a process. Point two, the why. Why do exposures get more expensive and really cheap? Because macro exposures. Because people have to sell macro exposures that don't have any fundamental reason to support them. So again, a valuation isn't an exposure. Being long small cap domestic equities, value equities, is an exposure when the world goes from growth slowing to growth accelerating. That's an exposure. The best way to show that exposure is in the Russell. So in other words, now everybody has to buy the same Cat 5 insurance at the same time after the Trump hurricane. Therefore, is the insurance going to get more expensive or cheaper? Think about it that way. Don't think inside the box that Wall Street gave you or the bankers or valuation experts. There's no expertise in valuation of macro. There is none. And please, I will bring out anybody and I will destroy them in a debate on this, because there is literally no historical data to support that macro exposures deserve premiums when the prevailing macro conditions, growth and inflation, are going up in the case of the domestic growth expectation, and they go down in the case of deflation being a major macro exposure with a rising dollar when oil got spanked all the way down to sub 30. So was oil cheap sub 30 or was it cheap at 50? How about 55? Well, it's back at 50. I mean, it was really cheap, obviously, at 30, but you needed the Fed to go dovish, you needed the dollar to stop going up for it to start going up again. So there's so many different things that you have to think about, but the reality is that the way that money flows is that it assigns premium multiples. Expensive gets more expensive, in other words, when a prevailing macro condition looks obvious, and things get cheaper on the way down when that prevailing macro condition continues. So again, you can take all your valuation experts and bring them on over here. I'll give them the lesson, because I used to think I was a valuation expert. And guess what it got me? A lot of mistakes.